We see a mixed picture. Overall, we have a historically high order backlog, so I'm not concerned over the overall backlog. But we do see a strong market in the US, both in the civil sector, but also in the building sector where we operate. So that's the positive thing. In Europe, though, we can see a weaker market, especially in the building sector. We see a weaker market in the UK, stable though in the civil, especially in the Nordics, Sweden, Norway. So it's a mixed picture here, but overall strong backlog still.
And as the other headline here has really been around the impairments and what we're seeing today on the residential development side, 500 million SEK in impairments and 300 million on the commercial property development side. Are we done when it comes to the impairments? Is this just a one-off reset, or do you think that there'll be more to come if we see a further weakness in these two areas of the market?
We don't give any forecast, but we do every quarter we evaluate our assets. So we have a lot of assets both in residential development and commercial development. So this is our best judgment of the value this quarter, and that has impacted us due to a weak market, continued weak market, definitely. So we have gone through everything, and we took the charges here both in the residential stream and also in the commercial stream.
And it's just to give us a sense of that weak market as you describe. We have seen interest rates starting to bite, but there is a view by a lot of economists we haven't seen the full force of those interest rates impacting the market. As you look at conditions now, what do you think the pain threshold looks like? Do you think that there is more to come in terms of pain for the valuations in the sector?
Remains to be seen. We do our valuation every quarter, but what we see now in the forecast for the market outlook, that is that I expect the market to continue to be weak, both in the commercial development sector and also in the residential development sector. I think it will require some stabilization in the interest rates. I think the inflation needs to stabilize or go down before we can see any light and improvement in the market sentiment here.
Anders, good morning to you, sir. Your construction business in the U.S., that has always been because of the pent-up demand pretty much out of the United States and perhaps even that federal spending that does come over. Are you seeing any weaknesses in that pent-up demand particularly?
No, we don't. We see a strong market in the civil sector and also in the building. And that is due to these federal packages that was introduced some years ago. We can really see the money is floating out in the system now, and also giving the different states a comfort and confident that they also start project now. So we can see a strong pipeline going forward for at least a year to go. So that is really encouraging.
You're not worried at all then by the fact that the U.S. effectively has come under severe pressure then right now for its amount of debt and may even cut back and pull back on quite a few spending elements, which we don't know for sure, but could possibly include things like construction and building. Would that be something you look at in the horizon at all in your picture?
Yeah, we look at everything very carefully, of course, but what we can see now at least 1 year ahead, and that's the time frame we give forecast on the market outlook, that the pipeline we see, the project, they are already funded. So I'm confident that if we look 1 year ahead, we will see a strong market in the US.